Welcome everyone to Playing with Fire, where we cover the hottest trends in the industry and also help you achieve FIRE, which is financial independence, retire early. Welcome to the show. I'm your host, Olivia Higgins. Now, what is in for this new episode that we have lined up? You'll find out very soon. Welcome back, everyone, especially those who just joined us. We're here for another live, but this time in our Moomoo Singapore studio, and it's for our new pillar show, which is part of a main show you already know, Playing with Fire. Once again, I'm your host, Olivia Higgins. Now, I'd like to remind you that today is all about education and making sure that we engage the community and help you with financial literacy. And as always, we're here to guide you to be in bridge to the experts that we have on set for you for education and analysis. So today, for today's episode of Playing with Fire, let us welcome the CEO and founder of Dividend Titan, Willie Keng. Hi, Willie.
Hey, hi, Olivia.
Welcome to our Moomoo Singapore studio.
Thank you so much for inviting me here, Olivia.
So for the people who would like to know you and get to know you for this episode, tell us about yourself and introduce yourself to the community.
So my name is Willie Keng and I'm the founder of a financial blog called dividendtitan.com. So I write a financial blog where I try to share interesting ideas, stock ideas, across the corners of the stock market. So what I do is, my favorite weapon of choice is basically using research. I am also a private investor myself, so I help to manage money for my family, my friends, and some of my closer clients as well. But at the same time, my past professional background is in high-yield bond research.
And of course, if you want to know more about his comprehensive profile, it's down in the description down below. But of course, Willie, thank you for that quick introduction. But today's topic, very, very important. It's about how you can build your portfolio for the Singapore market. And of course, National Day is coming, right, for Singapore in August.
Exactly.
So I think it's such a timely topic. But really coming down to the core question about the Singapore market and investing in this space. Now, I've got a question for you. What first are the top characteristics or something that people typically associate with the Singapore market?
Yeah, so this is a very good question, Olivia. And I always like to tell people and tell my friends that the Singapore market, right, is really like driving a car, right? It's either you're driving a Ferrari, right, which is like the US market, or you're driving a Toyota Corolla in Singapore. So it's something which is safe, it's
reliable.
steady, it's reliable. And for me, you know, I'm a father of two young kids. I wouldn't want my kids to be in a Ferrari. And after, you know, being in Singapore, 36 years old, paying off my mortgage, you know, accumulated some savings, I want to actually grow my portfolio. And one way to do it is investing in, you know, a stable or portfolio of safe blue chip stocks, and that's where the Singapore market really has that kind of power
Like
and
typically
potential.
Positioned as that, right?
Exactly. And if you see for the Singapore market, right, it's unlike driving that Ferrari. It's more of looking at your banks, your REITs, and this takes up a large portion of the market. You also have your conglomerates as well. Now, what's interesting here, Olivia, is that a lot of people think that the Singapore market is, you know, comprises mainly of properties and banks. But interestingly, if you go slightly deeper into the market,
Of course.
where you actually uncover are some of your consumer companies, for example, companies where you actually get to visit the shops, the food you eat, right, and the services which you use, right, where especially when you drive a car and you need to send for a repair, where do you actually go for some of these shops? And these are all in actually the stocks of the Singapore market. And that's really where it's interesting. And the Singapore market has roughly about 800 stocks today. So while it's slightly less than some of the big markets, say in the US and Hong Kong, Singapore is actually the largest, you know, if you don't count Japan, it's the largest REIT market in Asia. So that's actually very, very interesting.
So excluding Japan, which is also top, right, at the moment.
Correct.
Right. How is Singapore positioned with Japan at the moment in Asia Pacific?
Yeah, so Japan is actually the largest REIT market. So they have actually started about the same time as Singapore. But if you see, Singapore has actually grown very fast. You know, when they leased their first REIT in the early 2000s, which was Capital Mall Trust, they have actually grown by leaps and bounds, right? They have a lot of REITs which, you know, cover across industrial properties, retail, commercial. And that's the beauty, because for us Asians, and at least for myself, you know, we love properties because we look at it as sort of a safe haven, right? We get to see, we get to feel, we get to touch the property. So that's something which really intrigues me as an investor, because the idea that to own these assets and to know that these assets are able to actually generate some form of rental income, cash flow, it really helps a lot in, you know, creating that portfolio.
I think it's really timely you brought up real estate, because Singapore is in the hot topic sector at the moment regarding this topic, but we're also talking about the really high rental rates, and you know, for expatriates that come to Singapore, it's almost not affordable, right? It's on the brink of that, at least for people coming in. So what would you say, you know, investors should look out for in this space for the rising rental costs and properties in general?
Yep. So when we are looking into property investing, I mean, when you have rising rental rates, it's always a good thing for landlords, especially for REITs, because that's where you actually collect more rental income. But what's also affecting landlords are also the interest costs which they have to pay for the debt which they actually borrow. Because don't forget, REITs are essentially financing vehicles. What do I mean by financing vehicles? They function a lot like a bank. So they borrow money, REITs borrow money from the bank at low interest cost, and then they invest and buy into properties which have a much longer term yield and a much higher yield. Now, the problem comes when interest rates start to go up, means that the cost of borrowing this money to invest in properties start to go up, and that's where landlords start to face a squeeze or lowering of the profit margins.
Absolutely. I think that's something we can touch on later on when we take the community questions. But thank you for setting the context for the topic. Now, my next question for you is really about, you know, going beyond the characteristics. Now, what are the components of building your Singapore portfolio? Because, you know, we're not just talking about Singaporeans here. We're talking about investors based in Singapore and trying to look for the possible opportunities.
Great question, Olivia. Okay, so this is something which I, you know, start to relate to a lot, and I always see that investing is a lot like a business operation. So you are actually the CEO of your portfolio, and how you run it, you have to run it like a business. So you are the CEO, the labor force is actually your brains, and the rental, your office, is actually the bedroom. Because when I started investing 13 years ago, I started in the dorm or the hall of the universities which we came from. And I started investing from there. Yeah, exactly.
I love it.
Yeah, and that's where I started.
That's where your ideas conceptualized, and then you started executing from there.
Exactly, because that's where I started, because I was a university student when I started investing. So that was really my office. And you know, your inventories are the investment positions which you take in the business. And of course, when you're looking at a business itself, a business operation itself, you want to have a diversified inventory. You don't just want to have a few inventory in your business which helps to produce the income, right? So a component to investing and having that portfolio is to have a diversified inventory. So diversified positions, stock positions. So you don't just want to have a few stocks in your portfolio, but you also want to have different stocks, different number of stocks. But at the same time, you want to have stocks across different sectors and across different countries. And I think that's one essential component when you're looking at investing.
Really important there. It's good that you brought up that point 13 years ago, right? When you were in uni and you started it. I think the trend right now, and also part of the inspiration of playing with fire, is that the FIRE movement is quite popular amongst the Generation Z or even those within the early 20s age group. So I know they're all still in uni. So what would you say to build on for that? What would you say for a new investor in this space, someone really young? how can they start building their Singapore market portfolio?
I think this is something which I've also struggled a lot, especially as an investor. So there are a few things which you want to actually start off. Investors, you want to look out for two things here. Number one, you always want to have that curious mindset, meaning that, going out there, stay curious, stay observant. So say, for example, when you're looking at the things you shop, the things you buy, one good example is a stock called Sheng Siong. And this is something which everyone knows about. And if you realize that, if you just walk along some of the streets of Singapore, if you go to the shopping malls,
heartlands.
Exactly. Yeah. You will realize that Sheng Siong actually focuses a lot on the heartland areas. So they are actually located in the HDB void deck. So that's compared to, say, your NTUC or Cold Storage. They tend to market to the more affluent people. But Sheng Siong tends to focus more on the heartland areas where people are more budget conscious, and that's where you typically find all these shops. And to have that curious mindset allows investors, or at least for myself, to try to dig deeper. What is Sheng Siong's competitive advantage, for example? Because through these observations, you realize that Sheng Siong doesn't compete with some of their competitors like NTUC or Cold Storage in the same location. They focus a lot more on the budget location shops. So staying curious is actually one of them. The second one, I think it's more of a story which I have actually read some time back. And, as investors, you want to be like this person, this Dutch called Rip Van Winkle. So the story goes where he actually, he came from a small village, he walked into the forest and then he stumbled across, a cave and he fell asleep for 20 years. And when he woke up, he realized that a lot of things has changed. His wife has grown old, his kids have grown old, the people in the village has changed. And just that short sleep, 20 years has passed. And as an investor, that's exactly what you want to do.
That metaphor and analogy as well.
So you don't just want to, you don't want to stay asleep, with the stock market. But what's important here is that you want to invest as though, you can just ignore the noises, what's really going on in the market, just focus on what's important. So I think these are the two important things as when we start out as investors, especially, when I was a university student. I think it's something which is important to take note of.
I think it also alludes to the symbol that you brought up at the beginning with the cars, right?
Yeah.
Keeping the engine going and making sure that you're looking for new directions, new places.
Exactly.
Because if you're just moving with the fast engine with no direction, where are you going?
Exactly,
You're just gonna crash, right?
Crash and burn.
Crash and burn. We don't want that. So really, really important points there. But then going beyond the other characteristics you brought up, right? You brought up first the idea of resilience and also the stability point about the Singapore market. But what could some other potential attractive traits for the Singapore market be for the active investors constantly looking to observe and change their strategies?
Yeah. So if you look at the Singapore market, right? So if you take away the banks, the Singapore REITs, right, the landlords, you can also be looking into some of these hidden gems here. So Sheng Siong is actually one of them, right? If you actually look around the grocery chain stores. Another thing is if you are driving, for example, let's say you drive and you have to sort of repair your car. You will realize that you need to actually go to this place where you need to do an annual service checkup to make sure that your car is still approved or licensed to continue to driving on the road. And some of these companies, and this company is actually called Vicom, and it's a little known company. Not a lot of people know it, but if you pry open the balance sheet and if you go deeper into it, you realize that Vicom is actually a monopoly in the car servicing industry in Singapore. So they service the hundreds of thousands of cars here to make sure that the license is still ongoing, that the cars are still fit for driving, and they collect a lot of healthy cash flow. They have a recurring revenue, recurring profits, and very good free cash flow, which allows them not only to grow their profits but at the same time pay dividends for investors. And this is something which I like as I build the portfolio and grow this portfolio, a basket of dividend stocks.
Dividend titan, everyone. But that strategy point you brought up, and also because it's an example, right, that you were highlighting of things that people overlook on a day-to-day need. But these companies feed a very basic need of everyone, which kind of feeds into the characteristic of stability and resilience. But I want to really go into the point of resilience, okay? Because we're talking about a market that is quite uncertain in terms of sentiment. I have a lot of users that come on the show and say, what is next? What do I do next? Because I don't know where it's going to go. We've got the US situation, we've got the geopolitical tensions. So how can I really use this as a potential safe haven for myself?
Very good point. So for me, as an investor, the uncertainty of the market, navigating the uncertainty of the market is always something as investors we're always keeping a lookout for, especially when I started out investing from day one. But this is something which I like to bring to the table here, Olivia, is that countering and looking at all these uncertainties and how we navigate the market is always this belief which I actually found since investing 13 years ago. And this belief, right, is really what I term that shopping beats politics. So like what you said about the US-China tensions, the political tensions, you have the geopolitical tensions, you have people talking about, is China going into a World War III with the US?
A lot of noise.
So these are, what I call politics. But if you see, what's more important is to actually spend more time going on the ground, seeing, the queue for Uniqlo, for example, and whether the queue for McDonald's is still long, despite all these geopolitical tensions, despite all these quarrels, between the two big superpowers, right? And then also finding out whether, for example, your properties, whether the tenants are still filled, whether people are still walking to these shopping malls. And this is something which I feel is more important, because if you see, Singapore last year, the consumption, the amount of people consuming is close to $200 billion of the economy.
Right.
And that's a huge part of Singapore's GDP.
Right.
And consumption here is really important. So if we look at, shopping, I think this is something which I would actually focus on.
That's a good point, because I know during the time when the rising rates environment topic started gaining traction, and of course we saw the several hikes that happened with the Fed, we also saw that in Singapore, the consumption habits, like for even luxury goods, went up, which is, quite perplexing for people outside of Singapore. Maybe you could highlight some insights regarding that.
Yeah, so you have, during the lockdown, for example, people were just stuck at home and people just want to spend, because at the end of the day, people love spending. And it's good to see the spending habits. So luxury goods is one. So if you see, watches, bags, which people like to order, or they like to buy, and you can see this huge amount of spending pattern coming over during COVID itself, from 2020 we stretched out all the way to 2021. And this really signifies one thing, that at the end of the day, if you see, shares are actually really driven by the growing profits of these businesses. And as long as these businesses, they are able to produce the products, the services which people want, which people need, this is something which is good for investors. So as an investor myself, I will be shifting my focus, slightly away from the political situation and more into, okay, what are people shopping? What are you shopping, Olivia?
Yes.
What's on your shopping list? What are you eating? And earlier on, you just asked me about what breakfast I'm having. Sometimes it's good to see, on the morning cafes, what are people buying?
Books.
Are the queues
We
still
consume books
Exactly.
for breakfast.
Oh, I love books.
I mean, Singapore, you've got like Kinokuniya and all those places full of people, even when we had lockdowns and all that. So people are spending, like you said.
Correct.
Yeah, and do you have anything to add regarding the human behavior in Singapore as well, in terms of not just investing, but also despite whatever is going on outside of Singapore, how does that affect the Singapore market going forward into the end of 2023? And also, what are some long-term potential strategies that our audience members can look out for?
So it's very interesting you say this, because the whole market is basically divided into two big groups. Number one, you have your speculators or your gamblers. So these are people who tend to sort of what I call trade the market, or they sort of punt on the stocks or the shares, and they regard this as pieces of paper, right? But on the other hand, you also have active investors who treat, like for myself, where I see stocks not as pieces of paper, but more as long-term businesses. So rather than, trying to read about news saying that, oh, if the market rallies by another 15% and the market starts to take a breather and consolidates, and if you see strength in it, that's when the market will start to go up even more. So I don't look too much into that. For me, I look into more on the other camp, the active investor, where I'm looking at things long term, and I look at it, okay, if there are good businesses, I want to pick good businesses rather than picking stocks itself.
Really, really important, because in a lot of the communities, I mean, we're not just talking about the Moomoo community, but we're also going beyond to like even Reddit or Telegram groups, right? We have particular anonymous thought leaders that might affect the thinking of a mass group, right? And I think sometimes that's a good thing, but it's twofold. There is also a negative part to that, because then people they find it hard to look beyond and go into the research because they're buying into the hype. So as an investor in Singapore, what would you say is a key strategy to avoid this mechanism from happening? What do you do to drown out the noise?
Yeah. So for me, I still stay true or stay focused to one thing, which is having good research, and that's what's important for me, rather than looking at things from just a cursory view of the market itself. What I would do is I would talk to people, and you have brought up a really good point here, Olivia, because one particular aspect of investing for myself is actually having that kind of network, having that community. Because when we go in, I think it's important, not just on the research, but also talking to like-minded people, talking about investing, what are some of their ideas, and also using them as a sounding board to validate the ideas which you read. Because investing at the end of the day is not just sitting in your bedroom and just flipping through pages after pages of annual reports, but it's also important to stay connected to a group of like-minded investors or people who sort of share the same ideas, so that you can not only bounce off the different ideas which you come across, but more importantly also to do a check on whether we are too positive or too biased against certain ideas or certain stock ideas.
Right, reading the room and observing and figuring out what the general sentiment is, backed up by fact-checking and also research on your end, right? So remember to do your homework, guys. But the community point, very, very important, because it's what we're doing here today. We're having this show because, we want to engage with you guys. We want to make sure that we are in a room together and able to come together to help each other with our investment journey. It doesn't have to be alone, right? So if you have any questions, do keep typing into the chat box down below for Willie right here, and I'll pick out the best questions. Now, before we go into picking the best questions, let's just round up back to the topic of today, building your portfolio for the Singapore market. What would you say are the top 5 tools that a new investor or even just an active investor can relook at for Singapore market itself?
So if you're looking at tools, I would be first, if we are starting out investing, I would keep sort of like a watch list. So it can be something which you store on your computer, on your phone. So for me personally, I don't put my watch list on the phone because I try not to look at the market every day. So what I do is I keep it on a spreadsheet, and I will list, some of the good businesses or the good companies which I've come across, but they might not, might not be at a very attractive or reasonable price for me. So I put that in a watch list to sort of keep track. And, as Mr. Market, comes knocking on my door, telling me the prices of this stocks, I can choose whether to ignore it or I can choose whether to buy it based on this set of watch lists. So that's one thing which I would do. The second one is, of course, to have a simple portfolio tracking tool, which allows you to track your performance. And this is something which Moomoo app has, definitely.
Of course. I use it daily.
And you have this app to help you track your portfolio, what's the performance. And I think it's important because this allows you to keep track on how you're doing your progress so far. It might not be on a day-to-day basis, but it could be on quarterly or a half-yearly or an annual, check. To make sure that what you are doing in terms of your strategy is in line, your process is right, your strategy is on the right track. So these are the 2 simple tools which I will start first, as an investor.
Wow, really good and very fundamental as well. I think what he brought up as well is figuring out how you can streamline the process for yourself at the beginning. And of course, Moomoo app tools will help you with that. You can customize as much as you want, but of course, you can find out more details down below in the description. And of course, the tools that Dividend Titan has as well, right? You've got the links down below if you want to find out more, because I know I'm getting questions related to that. So thank you so much for sharing your insights and for the chat with me. And also thank you to the audience for tuning in, especially for the ones who just joined. Now we're heading into the Q&A pod, okay? So I'm going to take some community questions from you guys. So keep them coming. This is always my favorite part, Willie. So let's dive straight into the first question.
Let's go.
So someone would like to know, you shared about the different markets and investing also globally. So in terms of the U.S. earnings season, it was relatively bad, but the shares still go up. Could you explain how do I analyze this?
Okay, this is something which I don't agree most of the time, because look, people always talk about, so I was an analyst last time, and the problem with the industry is that people always talk about companies, the companies have to actually follow what analyst expectations are, and if the companies doesn't meet these analyst expectations, the share price will just fall. So this doesn't really make sense, because if I were the CEO of a company, my own company, why would I listen, or why would I base my share price on an analyst's viewpoint or their expectations? So a lot of times, if you are seeing earnings season where it comes out every 3 months, and you're talking about how the share price sort of disappoints here, is because of analysts are coming out with their own expectations and the companies are not meeting those expectations, which totally doesn't make sense. Because if I'm looking at businesses, for the long term, why would I want to bother about what someone else is commenting on my own business? I want to be just focusing on, okay, is the company making good revenue? Is the company making good profits?
The core, the DNA
exactly
of the company.
Is in essence whether it is still profitable as a business.
Really, really important. So I hope that answers your question. The next question, what about Hong Kong side and Singapore? What would you say is a tip to try to manage my investments in Asia Pacific?
I thought we were talking about the Singapore market today.
I think the investors in Singapore, I think they've also, I know quite a few of them who have a lot of investments outside. And I think right now with the potential volatility and also the uncertainty defining the markets at the moment, they're looking to come inward and back on home ground. Yeah. So what would you say are your insights for this?
I mean, I love that question because I'm an investor which invests globally. So I invest in the US, Hong Kong, and Singapore. I also look into Malaysia and at times Australia as well. So I'm more of a global investor myself, and I love looking globally because that's where all the ideas are. And looking into Hong Kong is slightly different from Singapore. I would say that Hong Kong is somewhere wedged in between the US and the Singapore. So it's a mixture. I would say it's a blend of driving a Ferrari with a Toyota. So you have a mix of both. And you can really find good ideas in Hong Kong. And personally for myself, because I might be traveling to Hong Kong for a business trip to actually look and kick the tires into meeting some of these companies, it's important, when we're looking into some of these overseas markets, to have, to have some on-the-ground research to know what's going on. Because local investors, the thing about investing in the local market in Singapore is because we are local investors, we know the market here. But the moment we go overseas, we need to have that kind of on-the-ground research. So it's either you actually go, take a plane and fly over there to see and talk to the managers themselves, or you would probably have to rely on some form of research or insights to get, some good ideas about what the market is. Because at the end of the day, there are different dynamics. Hong Kong market is primarily driven by the Chinese economy, and a lot of these companies, they are owned by state-owned enterprises and family-owned businesses, right? So if we want to actually look into some of these businesses, we need to understand what is the culture, what is the thinking behind some of these state-owned enterprises. That's one. And for the family-owned businesses, what is the culture? How is the business run? Whether some of these managers are long-term thinkers. I think that's something which is very crucial when it comes to investing overseas, especially in the Hong Kong market.
Yeah, one of my favorite books, Narrative Economics, he actually talks about movements in the market. Sometimes also a huge determining factor is related to human behavior and emotion. rather than just the pure analysis. What do you think about that?
Oh, absolutely right, Olivia. I mean, when it comes to investing, a lot of people tend to make the mistake, even for myself, that investing is all about the big numbers, right? We have to crunch those numbers into the Excel spreadsheet. We need to know what is the forecast for next year's revenue growth or the profit growth. But that's not true, because when it comes to investing, I think what's important here is to understand the psychology of consumer behavior, because at the end of the day, we're investing into businesses which makes money, right? And in order for businesses to make money, we have to know what are the psychology behind consumer behavior, shoppers' behavior, whether they are spending more on certain products, whether they are spending less on certain services. And I think that's actually more important, and something which is not actually talked about more frequently. A lot of times, when we grow up in an Asian family, even for myself, the focus is always on the numbers, the formulas, but that's not entirely true. I would say, if I would give a split, it's probably more, I'll follow more of the 80-20 rule, where 80% is more trying to understand more of the psychology of the market, the psychology of consumers, and 20% is more on the numbers itself.
Really, really good point there, because we're also talking about the appetite of each investor and also how open they are to changing their own strategies. And if you've been investing for a while now, even those who are, if you're tuning in and you're 40s and beyond, right, sometimes there are particular rigidity components within your characteristics of investing. How do you get out of that and try to be more fluid in this ever-changing environment right now, even more so today?
So when it comes to strategy, right, let's say we can talk about investing strategy and investing styles, right? I made a lot of mistakes, right, when I started reading my first book, as I mentioned to you, Olivia, on The Intelligent Investor. When my roommate back in NTU introduced me on The Intelligent Investor, it wasn't like a magic pill that I said, I found a eureka moment, and from there my performance went, exponentially higher and higher. No, that wasn't the case. After I read the book, I was still a bit confused by some of the technical terms. But more importantly was, I was willing to actually focus on the idea of a fundamental research, and I also tried out different strategies as well. One of my first few strategies was what a lot of hedge funds like to call special situations, where you are basically investing, very short term. You're looking at things like, quote unquote, your spin-offs, arbitrage, special situations. So some of these complex strategies which the hedge funds like to use, and at one point, I tend to follow that, and it caused me, to lose a lot of money. I remember investing in one US stock called Coach. So it's a handbag apparel company in the US, and I thought that it was supposed to be a special situation where they would turn around the business, right? But it ended up, the share price, dropped from about $70 over dollars, all the way to about $20 to $30, and I lost over $50,000. Unfortunately, from after pulling some money from my mom. Back then was my girlfriend, who's my wife now. Fortunately, she still stick on with me, my sister and her brother-in-law. So it was a really tough moment for me, having those mistakes. And, after a long while, continue to, refine those strategies, change those strategies. And what I realized is when we're looking into investing, strategies is one very critical aspect when it comes to investing, because like what you said, when we're looking at, this uncertain environment, where things are, you have no idea what's really going on, sticking to one strategy is much better than always having to change into different forms of strategy. So this is something where after 13 years I started to sort of evolve or transform this strategy, something which is more reliable, more stable, and that's where I sort of like the beauty of dividend investing.
Yeah, really good points there, because you're talking also about the characteristics of investors normally, because we see them all the time on the forums. And thank you for highlighting even the misconceptions that are associated with that. Now, you mentioned dividend as the last word. People like to know what was the inspiration for Dividend Titan?
So for Dividend Titan, maybe I'll just take the story back a bit. So when I was working in the private banking industry, so the financial industry, and I realized, when I was looking into some of the clients' portfolios, in different sheets of portfolios, and I realized over time, the clients who make money are the ones where they didn't really trade that much, but they rather they bought into very safe instruments, and these instruments are what I call bonds. It is not your treasury bonds; it's bonds which are issued by companies, and they pay regular income through coupons every half a year. And I realized this income started to grow over time as I was monitoring some of these portfolios, and it amazed me, how a portfolio, can grow as they put in more money. So it can be as small as from $10,000 to $20,000 to $50,000 to $100,000. And for some of these clients, where they manage millions, they have tens, 20s of millions of dollars. You can imagine the amount of income which they actually collect, just by sitting there doing pretty much nothing. And that really inspired me, because as I was changing, my strategy from something which is more risky, more complex, I dawned on what these clients were doing. And I tried it for myself, and I tried it for my mom. So I restarted my whole strategy again, and I told her, say, Mom, let's try one more time. Now the market is down, and there are some very interesting names. I started off with the Singapore market, and I started buying some of these REITs, some of these banks as well. So I recall paying about $13 to $18 for DBS Bank. And that sort of, years back, and it sort of accumulated over time. And I saw like the power of dividend investing, because I can just, buy into a stock or the business, and I just simply collect the dividends. I don't have to monitor the market too much. And that gives me a lot of time to not only do my research, to read, and to talk to people. So I think that's actually more valuable when it comes to investing, rather than actually have to stare at the screen the entire day monitoring the market. So that's really where dividend investing comes in. And why I wrote Dividend Titan was because I thought that this was a very, very interesting idea, because people think that, hey, dividend investing is slow, it's boring, it's not exciting as driving a Ferrari.
Right.
But if you see, over time, dividend investing, you have to complement it with, your paycheck. So let's say if you're in your 20s and your 30s, you still have income coming from a salary. You could take part of it, you put it in your portfolio and let it grow, because don't forget, investing is not just a 1 day, 1 month, or 1 year operation, right? The portfolio which you're building is probably going to last you till the day you die. That's going to be, at least for me, it's going to be the next 50 years. And think about it, for 50 years, the amount of money which you can accumulate through growing your assets and growing those income from dividends, I think it's just beautiful.
It's beautiful. Investing is beautiful. And it's an art as well. So always revise it, and always be that CEO of your own portfolio, like you mentioned. Now, to end off, someone would like to know, for Singapore market, right, for dividends and also perhaps even REITs, what would you say as a new investor who is a bit more risk adverse? How can they end up with such a strategy that you shared earlier?
So when we're looking at income investing or dividend investing, you don't just want to put all your eggs into REITs, because in 2008, 2009, the global financial crisis, caused a lot of banks and REITs to get into some sort of trouble, right? So you don't want to fill your entire portfolio with just REITs and banks. What instead you want to do when you get started is to have first a diversified portfolio of stocks across different sectors. So outside of properties, outside of banks, and you can find them in Singapore. You also can find them in Hong Kong, right? And you want to find some of these sectors like consumers, technology, healthcare, industrials, so on and so forth. So other sectors which allow you to mitigate the risk coming from other sectors as well. So if you are starting out, and if you are a risk averse person, I would highly recommend to actually look into more of a diversified portfolio across different sectors and different countries. Of course, because we have the local homegrown advantage, Singapore stocks will still be sort of an anchor for that portfolio. Personally, for myself, the portfolio which I'm helping my mom to manage, that portfolio has roughly close to half of that portfolio in Singapore, and the other half, is across the world.
I love it. You're the portfolio manager of your mom. That's the highlight of today. But thank you, everyone, for your questions. Now, we've got more questions, but let's hold it off here because that's all the time we have left. So, Willie, what would you say is your final takeaway for the audience before we end today's Playing with Fire episode?
I think as an investor, you want to really have that curious mind. So, don't just read what people say on the internet. Look for communities. Use the internet as a tool to access the different communities and try to make new friends. And from there, you never know what sort of ideas, what sort of stock ideas, what sort of strategies, what sort of new research comes up, when it comes to investing. Personally, for myself, when I started out investing, I myself also looked for a community, and I personally grew that community together with some friends into a very nice niche group where we just talk about stock ideas.
Excellent. Now, thank you so much for being on the show. To end off, we actually have a special gift for you from Moomoo Singapore. So I'm just going to take it from under here. Of course, with the orange bag. I think it looks very nice with this color right here. And do open it up and take a look.
Okay. Let's see. Oh, wow. Perfect for a rainy day. Let's see, what else do you have?
There's something very special in there.
Okay.
That has meaning to what you just shared earlier. Yeah, have a look into that box.
Okay.
Let's see. Unboxing.
Okay. Let me just take this, put it here. Okay, let's see here. Okay.
We're doing an unboxing tutorial.
This is what my kids would love to watch on YouTube. Kids unboxing their toys.
Yeah, you can watch the replay of this online. So what does it say, Willie?
Best dad ever.
Yes! Happy Father's Day, belated Father's Day.
Oh, thank you so much,
for this
Olivia.
month. But that is a special gift from Moomoo Singapore to you.
Oh, wow.
For being the best dad ever and the best portfolio manager for his mom.
Oh, my head just stood for my neck. I mean,
Oh, really?
This is, yeah. Oh, wow, I love it.
Yeah, so glad you like it. And thank you so much for being on the show with us. And that was very meaningful as well for our audience members. So we really hope to have you again on the show. This was CEO and founder of Dividend Titan, everyone, Willie Keng.
Thank you so much, Olivia, for having me.
Thank you so much. To the audience, if you have any more questions, I know people are still just joining in. Remember, you can still type in the chat box. And you can watch the replay of this on the YouTube and in-app, wherever you are. You can always go back and watch the parts that you also missed. And as always, remember to like and subscribe for this channel because we always have new shows lined up for you, crafted and created just for your own investment needs. And again, it's really about guiding you in your personal investment journey and being a bridge to experts like Willie. All right, so thank you so much for supporting this and being on the show. We'll see you for the next episode so that we can help you achieve fire in the process. See you for the next episode, everyone. Once again, I'm Olivia Higgins and
I'm Willie.
He's Willie, and we hope you have a profitable day. See you next time, everyone.